Crypto is sitting at a very weird spot right now. As simple is this the final bear market shakeout, or have we entered a new bull run? I'm not here to pretend I know the future, but I am here to show you what I would change and how I'm positioning my DeFi portfolio for the end of the bear market. Remember, all of the video, I'm going to walk you through two camps that we see in the market right now. One camp is the bullish reclaim thesis. That means they believe the June lows were the bottom and the market has already flushed all the leverage out. They believe that Bitcoin, Ethereum, and alt are preparing for the next expansion phase in the market. Camp two is the bearish continuation people. And that means Bitcoin, it still has not proven, it's not showing strength. Stablecoin dominance has been skyrocketing up, and Ethereum looks weak as hell. The breadth of the altcoin market is breaking down. Well, there's a few coins of strength, but that's neither here nor there. And we may still need one final capitulation event because right now I'm still leaning cautious. And while I'm recording this video, Bitcoin tapped back into 59K below $60,000. Look, I'm not trying to be bearish. I'm just saying, in my humble opinion, the charts have not confirmed a bullish case yet. So in this video, I'm going to cover Bitcoin, Ethereum, the Bitcoin pairs, other stablecoin dominance, the dollar index, macro liquidations, heat maps, and everything else, even a few altcoins. And if you stay around to the end of the video, I'm going to show you how I'm positioning myself with my spot and my DeFi portfolio. Those who are already in my free Telegram community already know what I'm doing. And before we get into any charts, like the video, subscribe to Dad's DeFi Space, and comment below. Are you in the bullish reclaim camp, or are you in the bearish continuation camp? Let me know. I'd love to talk to you, or just send me a message over on X, CryptoZone 1013. I wanted to begin by talking about the two camp thesis a little bit. So the way I see it is the market is split between two outcomes or two camps, right? The first would be the bullish reclaim camp. And this is the idea that the worst of our move is already behind us. Bitcoin reclaimed weekly key levels, and Ethereum is already starting to recover. I don't think so. But again, that is the way I see the market. Now, Bitcoin is turning lower, and stablecoin dominance is beginning to peak. We are above 15.5% at this point. Now, people who are within this camp believe that the bear market has already ended and that the bull market is slowly beginning already. Now, honestly, that is possible. Market strength is very fragile. It doesn't mean that I'm panic selling everything. It just means that I am respecting the downside until the market proves it otherwise. What we do here, structure over emotion, liquidity is more important than the narrative, although narrative is important, and process over prediction. Now, let's take a look at Bitcoin. Now, we're looking at the Bitcoin weekly chart, and I want to give you a good picture of our bear flag. As you can see here, the bottom of our bear flag was 59,294, and the top, we didn't get all the way up there. We almost hit, or what? Wait, maybe so. Yeah, 67, almost 67,200. Now we attempted to get back up into the channel, didn't happen. And if I go down on a lower time frame chart, such as daily, you can see how we broke through our bear flag channel, attempted to get back up into the channel, and then were rejected. And you can see this even sooner when we went on a lower time frame, like the 4 hour. But if we take a look at Bitcoin's daily chart and we zoom not really out, just a little bit, so we can see this a little better, you'll notice that we, like I said, broke below the bull market support band, and we have at least 3 levels to conquer before we're even back up at the bull market support band. Ish 67,200, and then up here are at the 70K psychological level. Now, I'm really not going to be bullish again on Bitcoin, not long term, or excuse me, midterm, until we get back above the tariff capitulation lows. But just because I think that Bitcoin is in a downtrend and bearish right now does not mean I'm not bullish on Bitcoin in the long term. So we need to watch whether buyers start stepping in and buying with strength with high volume. I'm seeing a little bit of volume uptick here on the downtrend, but what we want to see is volume like this with some big green buying candles, right? I think a lot of people right now just need to see that confirmation that the bear market has bottomed. We know we're getting close because we've broken below the 200 week. I've talked about this a lot on my channel. So look, we broke below the 200. We've been below the bull market support band. We have broken through our bear flag. We're going lower. I personally believe this phase that we have just entered is going to be kind of our final capitulation event and then consolidation at the bottom. But I do need confirmation first. Now let's take a look at the Ethereum chart. Now, this is the Ethereum day chart. And looking at it, you can see that we broke below the bull market support band pretty much last May. We've been in a downtrend since then, but that downtrend broke through our range that we had been in for a nice little amount of time. What was that? We were in a trading range from around January of 2026 to June of 2026. We earned some crazy LP fees during that time between the ranges of $1,900 and $2,475. Back when we had to do a lot more kind of manual work with our LP management. On top of that, once we broke below, we kind of created a new range between $1,500 and $1,800 that we're in right now. Now, Ethereum bottomed out today around we could get towards the bottom of the bull, 1,300, maybe even as low as $1,200 or $1,300, which would basically be on par with the capitulation low-ish, not the low, but the beginning of the rise after last bear market. Although our original base and support is sitting right where we are now, around $1,500. So we are in a very, very, very important spot for Ethereum. And not only that, we're in a very important spot for Ethereum, below the bull market support band, below the 200-week moving average, and at this major area of support that goes all the way back into last market cycle. Now, that to me is one of the bigger warning signs of the market, because if Ethereum is not showing strength, most altcoins are not showing strength, right? Because without Ethereum, like an altcoin season cannot happen. A broad alt bullish period is very difficult without Ethereum also being bullish. Now, that brings me to the Ethereum Bitcoin chart. Now, I've talked about this chart over and over and over again on my channel. And the Ethereum Bitcoin chart, we have been in a downtrend for an extremely long period of time. Even after our last pump, which was a nice one, but not what we normally get, around 130%, 125%, something like that. We tapped into the top part of our channel, and it's been just chopping its way down ever since. Now, we've had a couple of time periods where Ethereum was outperforming Bitcoin, but I honestly think if we break below this kind of bottomish area between 0.025 and 0.026, Ethereum and Bitcoin's even going to go lower. The last one I have marked on my chart right now is 0.017, which is way down here towards the bottom of the range. It's all the way down at the bottom of the range. Now, why is Ethereum Bitcoin one of the most important charts we need to look at for altcoins? It's because Ethereum Bitcoin tells us, is Ethereum outperforming Bitcoin? And when Ethereum outperforms Bitcoin, altcoins begin to outperform Bitcoin. So it's very hard to argue. There's not an alt season without an Ethereum season. So that's why I keep saying no broad alt season until this chart improves of Ethereum. The thing is this: if you stick around till the end of the video, I'm going to talk about some of my positioning and some of my strategies, and we'll go from there. Just remember that in the altcoin market, selective strength is not the same as broad confirmation. Now, another chart that we all Degen chart, otherwise known as the others chart, it excludes the top 10 cryptocurrencies. And the chart matters because this one pretty much shows you the broad altcoin market. Okay. And if you take a look here, you can see all kinds of confluence over the different cycles. We were in a massive downtrend, which we broke through. We were in this channel between $176 billion and $208 billion. We have just broken below it. We tapped into the bottom of that support, which is sitting at 160. Our next target would be 134. That is not good for the altcoin market. I want to see us stay above 176 or get back above 176 before any kind of altcoin strength is going to be shown, in my humble opinion. So even though others is below key support, failing the reclaim, everything I just said, it just tells us that capital is not flowing into altcoins. So until then, not chasing pumps. If anything, I'm going to short pumps until otherwise. But that brings me to another chart that is kind of a boring one. We don't talk about it that much, but I think it's very important. And that is the stablecoin dominance chart. Now, this is a combination of most stablecoins available. It is way above the bull market support band. You can see our uptrend. It is sitting at 15.32%. We tapped into 15.5 earlier today. This is the highest stablecoin dominance has ever been. Some say we could go as high as 18. We could even be at the top of range. I don't know. But when stablecoin dominance rises, it usually means investors are moving their capital into USDC and USDT, all the biggest stable coins. This is less risk within the crypto market. They are waiting, and they're waiting for that bottom confirmation. And guess what? Some of them will probably wait a little too long. So no one ever truly is going to catch the top or catch the bottom. We're looking for the trends. We're trying to take a cut of the profits out of the middle. That's how you win. So on that note, I just want to tell you, if stablecoin dominance is rising, you need to stay cautious. I'm going to stay cautious in this market. And if stablecoin dominant peaks and begins to roll over, which it hasn't yet, that would be one of the first signs that capital is starting to rotate back in. Capital is starting to rotate back into crypto assets. So let's zoom out for a little bit, right? Because obviously, all of you all know that crypto does not trade in isolation. You got the dollar index, treasury yields, oil prices, equities, liquidity, global risk appetite. You have politics, you have wars and pandemics. What do you know, though? Right now, that picture is actually mixed, and it is affecting the crypto markets because markets don't like uncertainty, right? You have the Japanese yen carry trade beginning to unwind. If Japan jumps in and supports their dollar or their yen, that's going to bring yields up. People are going to go back into the yen out of their assets and trades. Hence, maybe part of the reason the market is dropping. On that note, oil has also been on a serious downtrend. The fact that oil was over $100 for as long as it was due to the Iran conflict has affected all markets. So, to be quite honest, with all of this going on and so many other things, the stock market has shown quite a bit of strength this year. It's been going nuts, but as you know, I believe we're kind of rounding to the end of a business cycle, a real estate cycle, and I think we're working towards something not too good before 2030. But that is a video for another day. But the thing is, we're not seeing that same strength, that hold up within the crypto market, right? The dollar is staying super strong right now. We'll look at the chart in just a minute. Yields are elevated and the pressure is on, right? To risk assets, that would be Bitcoin, Ethereum, Solana, and all your altcoins. So let's take a look at the DYX chart real quick. This is the US dollar against a basket of currencies. It has been pumping like an altcoin. We're sitting at 101.59, $101.59. And we have been pumping, well, since June 17th. When the DYX shows strength, usually risk assets don't. Money is moving back into the US dollar. So the euro is weak right now. The yen's obviously weak right now. And all of our risk assets are weak right now. This is a chart we can just keep an eye on because if the DYX is weakening more, yields cool. Excuse me. If the DYX weakens and the yields cool, equities remain strong. That will support the bullish reclaim thesis of Camp 1. But if the DYX stays strong, crypto underperforms, then you got to respect that bearish continuation, and Camp 2 is the one who is correct. But how do we win? You have a plan for both camps. That's right. Process over prediction.
So let's look at liquidity. A lot of people miss this one. So we're going to take a look at. So you are looking at the single day Bitcoin liquidation map for Binance. I don't think people realize how important liquidity is in the market because markets aren't going to move based on what you think. Bitcoin actually likes to grab the liquidity on the edges of the market. So the liquidation heat map actually shows where the leverage traders are exposed and stacked below or above the price. Now, we do have a little bit of liquidity stacked right next to the price. In fact, these people are about to get liquidated, but it's only $29 million. And if we go back down to 59.1, you got 62 million, maybe even if we go all the way down to 58, you're looking at 202 cumulative million dollars. That's it. But if we go the other way, look at this, 60,000, you got 82 million. If we get back there, 61, that's 159, 160 million. 61, 700, you would have 346 million liquidated. And if we go over here and we make it all the way to 63, 358, that's almost $700 million of liquidation leverage. So during this capitulation event that occurred today, a lot of the long leverage in the market was flushed out. I mean, mine hit the stop losses. And I only had one Bitcoin long at the point, but it just means that this continuation of the bear market or beginning of the bull doesn't matter. It's going to be choppy because Bitcoin's going to keep chopping around, grabbing that liquidity. So would it surprise me if we have a pump and grab some of this upside liquidity? No. Would it surprise me if we break lower? No. I just need to have a plan for both. And that's what I want you to do. And that's why I don't want you to just marry one prediction. And I want you to plan for both outcomes. And I want you to learn and educate yourself so you can do these things for yourself. Now, here is probably one of the most important parts of my entire video. And that's not really a joke because the goal is not to perfectly time the bottom. The goal is to survive. And that is because we're in a bear market right now. You want to preserve your capital and be positioned when the next expansion phase begins. So many will not be ready. My end of the bear market positioning is built around 3 ideas that I want you to understand. Okay. First, I want quality exposure to assets I believe in, right? Bitcoin, Ethereum, Solana. If I was trading X stocks, it would probably be Tesla or I don't know, maybe Palantir or something. I don't know. And those are ones that are probably not going to perform very well, at least in the near term. Second, I want to get correlated pairs, right? And this is where DeFi gets very interesting, right? A lot of people, they think, and I used to be guilty of this. I'm thinking, all right, I'm going to be less risky. So I'm going to go into Ethereum, USDC pools near the bear because half of my positions in USDC, that's going to help preserve some of my capital. That is true, but only if I'm not rebalancing all the time. And if I'm rebalancing all the time, I'm going to lose out through impermanent loss during that time period. I would be better off, in my opinion, being out of the market. But if I farm correlated pairs of assets I believe in, I can earn the yield. And yes, my principal is going to go down with the market. But as long as I'm accumulating more assets as the market goes back up, not only am I going to get the price appreciation of the two assets, I'm going to also get all the yield I've collected over that time period. And I've already started to do this in my Max 5 portfolio. So instead of just holding a bunch of spot, I tend to try to split it half and half. And instead of just chasing random high APR pools, I'm focusing more on pairs where assets are very correlated. If you don't know how to do this, you can always go to DeFi Buddy, created by Alex, right? The dev behind MaxFi and SnuggleFi. It has a great crypto market overview. And most importantly, over here, they have a pool simulator and a correlation tool and an impermanent loss and hedging calculator, which are awesome. Today, we're going to go on the correlation tool. They have an awesome one, and you can just put in some of your favorite assets. See, we got Bitcoin, Ethereum, Solana, and we'll do Hype, and that's good enough for now, right? Now, we're wanting to find things as close to 1 as possible, and I wanna point out a couple things. Look, why has everyone been talking about Ethereum, Solana? Ethereum, Solana has a correlation rate of 0.90. There's almost none at all, so you can stay in range for long periods of time with a small range and earn a lot of fees. But You would not want to be in a position like, I don't know, Bitcoin hype, a point one. You are going to get chopped up by impermanent loss with one that's this uncorrelated. So, oh, look at this. Bitcoin, Solana, that one's pretty good too, 0.89%. So I might need to do some research on some of those pools. My point being is every one of these assets are ones I believe in. I don't mind holding them. And I'm okay with farming them, not losing, but watching the principal drop a little bit during this last phase of the bear and then ride the price appreciation back up. Now, why am I talking about correlated pairs? Because it's the end of the bear market, and I believe it matters because if price recovers, I want that upside exposure as much as I want the yield. But like, if I want, even if the market still stays choppy, I want my capital working, right? So I don't need every altcoin. I don't got to jump on every narrative or look at every chart, but I do need to have a plan. And right now, I'm personally watching assets that hold in structure better than weakness and searching them in correlated pairs. And on that note, I wanted to take just a moment to look at a couple altcoins because there's a really, really simple way to determine bullishness of altcoins. A lot of times, the altcoins that show the most strength during the bullish periods, and at the same time, they drop less or they recover very quickly. These are the strong coins, strong projects you want to get into, in my humble opinion. That's what I do. Now, some of those coins are right now would be Hype, Tau, Arrow, Ondo for a little while. And we're going to just take a look at some of these charts. Now, before we get into any of these crazy, awesome, spectacular altcoin charts, I want to show you some bad altcoin charts. Now, the first one I wanted to look at today is Solana. Okay. Solana started to look a little weak. Well, we've never been able to get back above the bull market support band, right? We tried to do it here, kind of did it, fell through. Came up here, didn't even get close to the bull market support band. And then what did we do? Chopped around for a really long time. There's your bear consolidation. Tap into it again in a downtrend. We never made it. This is bearish for Solana. I do expect us to go lower. I have $56 marked on my chart, but gosh, we could even go as low as where I started accumulating last cycle, which was 30 some odd dollars for a Solana. So look, strong altcoins are still going to get dragged down if Bitcoin loses structure. So obviously we don't blindly ape into them, but I look at strengths. I watch the levels and I see which ones are actually bullish. Now let's take a look at a chart that is terrible. That would be this one right here. Zora. I hate to say that because we are below the 1 fib level. So we are in discovery price territory for the bear market. And right now we're sitting at 0.0694. We bottomed out even a little lower than that. I had 0.07777 marked, which was our 0.1 level. It looks terrible. It doesn't mean that I'm going to be 100% out of Zora. I still have creator coins of some of my favorite creators, but I am not actively accumulating Zora because this chart is weak. So, what do you see in a strong chart? Well, one of the easiest things that you can do to locate strength in altcoins, put on the bull market support band, turn on your RSI indicator, relative strength index. Whoops. Chart that I wanted to bring up today was the hyperliquid chart. Hyperliquid has been the darling of the bear market and has looked so bullish. We can go back to the beginning of the bull and you can see, yes, we had a bearish time period. We were like what, $40, broke below the bull market support band. Let me zoom out a little bit, right? And we went on a downtrend, bottoming out around $21. And since then, we have been bullish, breaking above the bull market support band and establishing a base, basically the month of February. And it has been off to the races since then. Now, there's a few things I would look at, be aware of if I were you. On hype, as bullish as this chart still looks, we are way above the bull market support band. I do believe we'll probably revisit the bull market support band. But I'm finding altcoins with charts that look like this. A lot of times these can make better investments. Now, that doesn't mean that Hyperliquid isn't going to have a massive correction. It has been so bullish. I mean, we could go all the way down to $44, maybe even all the way down to this like base around 34 again, maybe lower. I don't know. But these are the kind of charts that I'm looking for, narratives and charts that are going to fall in this category. And then finding correlated pairs that can farm those assets. Now, another chart is the arrow chart. It has been so bullish because of the Velodrome merger and its extension into the Ethereum and Optimism ecosystems, also the super chain, excuse me. Aerodrome Finance looks just like Hype. not quite as bullish, but still pretty bullish. What do you see? We got above the bull market support band, held it as support, rocketed up. We're back down testing our support around 47.8 cents. Now, could aerodrome revisit below the bull market support band? Of course, but the bull market support band is going to be our line in the sand of, is it bullish or is it bearish, right? Another altcoin we were following was the Tau ecosystem AI infrastructure play modeled after Bitcoin. I'm still bullish on Tau. Now, we have sold out of some of it in most of our subnets, but we will be accumulating some once Bitcoin bottoms out. As you can see, Tau has broken back below our floor, our short-term floor, which was $216. We're sitting at 212 right now. We've gone as low as 184, and we could even go as low as maybe 176 or 146. Those are some areas I would like to mark on my chart. These are just areas where I see a lot of price support, and I believe that there could be some light resistance. But this chart is starting to look bearish. We're in a downtrend. Really, it's a downtrending channel. As you can see, I could draw this almost perfectly with this one probably. And not only are we in this downtrend channel, right? What else do you notice? Broke below the bull market support band. So yes, I think we're going to revisit some of these lower lows, 175, 144, whatever. Now, another chart a lot of people have asked about is Ondo. Ondo is broken through our falling wedge. I don't know. Keep an eye on this trend. I also want to keep an eye kind of like on this floor support. What is that? Around 26 cents. And we are tapping into our bull market support band right now. If we can't get back above this, I'm expecting Ondo to go lower. I got a couple places marked on the chart, 26 and 19 cents. And as you can see, we're a long way from back when I did these fib levels back during the bull run. So now that you know how I'm positioned, not completely, I'm going to make a deep dive, detailed video on how I'm approaching the end of the bear market and not get so much into charts, more into strategies and plays. But what would make me more bullish? Well, here's the first things that would change my mind. We're going to go back to the Bitcoin chart. Bitcoin needs to reclaim their weekly resistance, right? And our weekly resistance right now is basically, our weekly resistance is going to be 63,000. And then after that, 67,000, because we really need to break through both of those. Now, at the same time, I want to see Ethereum outperforming. I want to see Bitcoin turn higher. I want to see other reclaim that $176 billion level, stablecoin dominance rolling over, and the DYX weakening. These are the things we're looking for. I want to see that the liquidation map is showing that the downside liquidity stays cleared out. People don't keep going short. And that that the upside liquidity has already cleared out. And that there's not a bunch of shorts piling into the market. The stronger altcoins are the ones that I want to focus on because they're the ones that are going to perform better as strength comes back to the market. I'm going to stay away from those coins that are making lower lows and newer lower lows. And if these things happen, I'm going to begin to get more aggressive. That is the bullish reclaim playbook. I just don't think we've been in the bear market long enough for this to occur yet. Now, what would make me even more bearish? Bitcoin loses that range support, which right now is around $59,000. Ethereum underperforming, dropping below 1,500. Ethereum Bitcoin is breaking lower. Others chart loses support, and stablecoin dominance continues higher, right? What am I going to do? Well, I'm going to reduce weak exposure. I'm going to avoid chasing, and I'm going to look for hedges in the market. And we're going to find those best accumulation zones. And I already think we're there. I just think we haven't waited long enough yet. That's not fear, and that's not greed. That's just having a process. So if this kind of breakdown helps you, please hit that like and subscribe button. I'm trying to grow Dad's DeFi space into a place where we can think through markets clearly without all the hype, without the fake uncertainty, and without pretending every dip is automatically a generational wealth buying opportunity. And if you want the real-time version of how I'm thinking of all these setups and my market analysis and my DeFi plays, join our free Telegram group. That's where I post more frequent market thoughts, DeFi positioning, And it's also what I watch day to day. Now, truly in the market, this is the big idea. None of you all need to time the exact bottom. I'm not going to. If someone you know does, they got lucky. But you do need a plan. You need to understand your risk levels and where the market could go. And you need to have a plan if your thesis is confirmed, and another plan if your thesis is invalidated. You got to know when to go hard, when to step back. And that's why I'm focused right now on correlated pairs, stronger altcoins, defensive positioning, why this bear market is resolving. And that is because if this truly is the end of the bear market, I want to already be positioned. But if there's one final flush, I want to survive it and I'll farm some yield while I wait. So again, my view is super simple. The bullish reclaim camp is possible, but the bearish continuation camp has a much stronger story and stronger evidence until the information and the charts prove us otherwise. So remember, watching Bitcoin, Ethereum, Bitcoin chart, others, Stablecoin Dominance, DYX, Macro Liquidity, and so much more. And I position with patience. The correlated pairs, selective strength, and of course, risk management first. So like a video helped, subscribe to Dad's DeFi Space, and let me know below. Are you positioned defensively right now? Are you getting more aggressive and beginning to accumulate your favorite coins? Join the free Telegram if you want more real-time market updates and DeFi positioning. And remember, this is all educational only, not financial advice. Manage your own risks. Go touch some grass today. And until next time, peace.